Now again, moving on with the second part of our mini educational series regarding how to trade a trend or what is a trend. And on the first part we laid down the rules of identifying a trend, and on this second part we will look at exactly how to apply those rules and effectively how to trade a bullish or a bearish trend. Now let's go a bit again over the steps to be looked upon. The first one will be to look for a series of higher lows or lower highs, and after identifying those, at least 2 points, ideally to be 3, then we should draw a trend line that should help us define the edges of the trend or the upper or lower edges of the trend. And then of course in a bullish trend we will look to buy call options every time the lower edge is going to be tested, and in a bearish one we're going to look to identify to buy, of course, put options. Now depending on the time frame that a trend is identified, we can play with the expiration date, because if you see a trend and a move that is channeling really nicely but it is actually on the daily or the weekly chart, then you might even have problems in identifying the correct expiration date. But if it is on the 1 hour chart or the 4 hour chart or even on the daily chart, it's pretty straightforward. Now the very definition of a trend, like we said here, to look for what? To look for a series of, so this is a high, and then the market breaks the previous low here and then forms a lower high, and then the market goes and forms what? A lower high. Now already from this moment of time we know that this market is forming a trend. Remember, the trend is not necessarily to channel well or extremely well, because that is happening only in corrective waves. In impulsive moves, due to the principle of alternation between the corrective waves, you might have different situations. So what to do here if you have such a situation? Well, we go and take a trend line, and then we connect these 2 points here, and even the third one, and it doesn't have to be to take into account all the spikes. And then to do what? We copy effectively. Let's go and take this trend line from here. We copy effectively this trend line and put it to the downside here, and this is our trend to the downside. Now, is the trend ended, or when does the trend end? Well, take a look what we said here. Look for the market to close above the previous 2 higher lows or lower highs in order for the trend to be corrected. So actually we will need for a close above these ones here in order for the trend to be corrected, but it isn't. Instead, the market is continuing, making another lower high, then is making another lower high, and from this moment of time we can go and extend the trend if you want. As you can see, it is the same trend, but it's having just a different angle if you want. Then copy the upper edge of the trend line of the trend, and then put it to the downside here. And of course, in the bearish trend, these are 2 bearish trends, and this would be only A, B, C, probably an intervening X-ray or stuff like that. So in a bearish trend, we should look only to buy put options. So after you have the first 2, this is a nice place to go and buy put options here, and not buying call options on the test here, because the market can relentlessly go here and your option would end up expiring out of the money. Now this put options, every time this one is tested, remember we can have this trend line from this moment of time. It is just a forecast on the right side, and normally being on 1 hour chart we can trade here anywhere or anything between end of day expiration date or even end of week expiration date, depending on the moment during the trading week the signal appears. And then the market goes and makes here a new high. Of course we are not going to trade this high here, but then when it forms a new one, we just wait for the market to go and test the upper side of the range again and again and again, to go and buy put options, and only put options on the falling trend. Even here, and even here on the Australian dollar, US dollar, on the piercing here, we may go and trade an end of day if you want, expiration day. Again, to be avoided, call options in a falling trend, in a bearish trend, and the put option in a rising trend, because you may just play with fire. I mean, sometimes it works, sometimes it doesn't. Here was a nice call option, but depends on the expiration date, you may be even on the wrong side. Here as well, but here it doesn't really make sense. Thank you very much for being here. This is fairbinaryoptions.com. We just showed you how to use simple logic to identify a trend, and when the trend should be ended, what to do with binary options. Have a great day. Bye bye.